In this next video, we're going to go over something we like to call the maximum price movement. Just like in the methodology video, we explained the importance of separating each trading session of the day because of the behavior of different currencies. Just like we have the US session, the Japanese session, and the European session, we like to establish a trend before we start trading or placing any of our trades intraday. Now, the maximum price movement is very, very important, but it has to do within a 24-hour period. Now, before we get started, I want you to take a look at this chart we have in front of you. To the right, we have the time of 7 a.m. New York time. That would be the start of the US session. To the left, you could see we have 5 p.m. New York time. Now, we're using a 30-minute chart just to give us a broader view of the price movement for the last 24 hours. Now you can see this chart not only gives us a 24-hour period, but it goes all the way back for a few days. Now you don't need that much information. You can use a chart that may be a 15-minute, sometimes you may use a 10-minute chart, and it might do the job. Use something that's comfortable, but enough where it gives you the price movement, where you're able to go back and see the open and the close of the new day. Now the close and the open of the new day, we're going to place at 5 p.m. New York time, which is right after the US session ends. Now this is the example we have in front of you. So we're going to pretend we all live on Eastern Standard Time. We open up our charts. It's 7 o'clock in the morning. We could view to the left. We could view all the price movement and everything that happened during the European session, the Japanese session, all the way back to the end of the US session. Now this is where it becomes very important. The maximum price movement is the max price that we have seen over the last several years. For example, the euro, where the price can move anywhere between 200 and 220 pips, and it becomes a very strong support or resistance level. It becomes a resistance level if the price, such as this example, moves higher, up to 200 to 220 pips. It becomes a support level if it moves down, if the price moves on a downtrend. Now we're going to take this example and we're going to show you why it is important to pay attention to the maximum price movement before you start thinking about placing any trades. And it is important to analyze the market and to take the 3 different sessions into consideration. First, let's take a look. We have 5 p.m. New York time. We have established this will be our starting point to analyze the maximum price. We have a price of 135.40. Now from 135.40, you can see that the price moved lower to the lowest point of 134.80. Then during the Japanese session and the European session, you can see the price continued moving higher all the way up to the highest level of 136.87. The price gradually moved down and we're almost at the same level of the highest point. But you're going to take from the lowest to the highest point and you're going to calculate how many pips the price has moved while you were sleeping or while you were away from your computer. Now you can either do this manually or just take a calculator. You can subtract 1.3667 minus 1.3480, and you have 187 pips. That means after the market closed during the US session at 5 p.m. New York time yesterday, the price moved down to 134.80 and it continued moving up to 136.67, which we have a price movement of 187 pips. Now, why is this important? Where does this calculation come into play? And why should I pay any attention? Because I feel that the euro might go up another 200 pips. Well, once again, the maximum price movement is what we're trying to explain to you. That once you get to that 200 pip level, or 220 max pip level, it becomes very difficult for the price to continue moving higher. Now let's take a look to the right. You can see in the right we have 7 a.m. New York time and the price is almost back up at 136.67. It might be a little lower by a few pips, but we're about to begin the US session, a completely new session than the European and the Japanese session. But we've noticed that the price has moved 187 pips. That means that even though for the next hour, hour and a half, the price may move up and touch the 200 to 210 pips, we're still trying to establish a trend during the US session. But it's going to be very difficult for the price to give us a good uptrend of 50, 60, even 100 pips during this US session because it has already reached the maximum price during the previous sessions. So now this is where this information can help me when I'm analyzing the market. Because the price has moved 187 pips, and I know about the max price movement, I know there's not a lot of room for the price to continue moving higher. So I'm not going to take a chance and place buy orders and possibly get stuck when the price starts retracing or even changes in direction in the US session. What I can do is patiently hope and pray that the price is going to move lower and going to establish a downtrend for the US session. Therefore, I have all this price to move down during the US session. But I'm not going to risk getting stuck trying to place a buy trade to try to make 10, 15 pips when I can end up losing or getting stuck 50, 60 pips because we have already maxed out the price or the price has moved up significantly during the previous sessions. So once again, this is what we like to call the maximum price movement. And it is something very important that you should pay attention before you start thinking about placing any trades. And you should always analyze the market to see how much the price has moved in the currency that you're trading to see if you have enough room in case the trend continues moving in the same direction as the previous sessions. Like here during the Europe and Japanese, you can see the price movement went up. So do I have enough room for this price to continue moving higher during the US session? And the answer would be no. You have another 20, 30 pips, but it wouldn't be worth placing a buy to get stuck or possibly having the trend change, get stuck while the price is moving or changing. So therefore, the maximum price movement will help you limit your risk and your exposure. We hope this video will help you when you're analyzing the market intraday, especially when you're trading during the US session. If you have any questions, please feel free to contact us or speak to your account manager and have him clarify this information. Good luck trading, and don't forget to review the next videos.